Our our next speaker has got the longest list of titles that I need to read out. Our friend Charlie Kleisner will speak about why impact continues to matter and how to do it right. Charlie is the co-founder of Tonic and the KL Felicitas Foundation. He's a full member of the Club of Rome and the chair of the supervisory board of Elia AG here in Austria. Charlie, the stage is yours. Thank you so much for being with us, and very excited to hear you speak. And the only one who's mic'd up like me, huh?
Thank you so much,
Real
David.
expert.
Yeah. Well, because I like to wander around, right? And so don't want to be static here. But thanks for the kind introduction. I figured if I'm in Austria, I might as well put out all my titles, but I live in California where titles are really not necessary and not appreciated. And thanks for David for putting together this wonderful conference at this wonderful place. And thanks for all of you to show up here. I'm delighted to be here, and particularly about the panel then and having interactions, and afterwards I'll be around until the late afternoon to continue our conversation. So I want to introduce myself briefly to you. I am Austrian and have a PhD in computer science from the Technical University here in Vienna, and immigrated to Silicon Valley in 1986 and had a very, very successful career there, usually as the CTO, the Chief Technology Officer, or Senior VP of Product Development, the main technical guy on the team, sometimes co-founder, sometimes not. And I was privileged to participate in 3 successful startups, which is wow. The first one was Next, a company that Steve Jobs founded after he was fired from Apple. And I was his development manager, developing the operating system, which is now Apple's main operating system, a very successful product of mine. And then I went to AI, data mining, analyzing your behavior, not figuring out what would become of that, a major problem in today's society that I will talk about from an impact perspective. And then my most successful startup was Ariba, a business-to-business e-commerce company that we took public in 1999. And then I exited in 2002 after I diversified my stock holdings there. It's now SAP Ariba. And that created our wealth. And so we are a wealthy family. And my wife Lisa and I, in 2001 and 2, had to figure out what does wealth really mean for us as a family, right? And that's when, after a liquidity event, either the partners fall apart in Silicon Valley and do other things. If one person wants to do the Ferrari thing and the other one wants to self-actualize, it doesn't fit together. We were lucky that we were both on the same place, and saying that we were lucky to get that much capital into our family, and we have the responsibility of doing something meaningful with that, not just for ourselves, but more importantly for the planet and for humanity, which is now called impact investing. So that was in 2002. Nobody knew what we were talking about. The industry was like, what? Impact? What do you mean? And we said value-based alignment, all that. And we became, because we were so pushy and entrepreneurial ourselves, we became leaders in the field of impact investing. I'll talk about that a little bit more. So for instance, we analyzed the whole system, a financial system, to figure out how to transform a non-impact economy to an impact economy. If you want to do that, at that point in time, you had to invest in both the supply side of capital and the demand side of capital and the intermediaries, right? Because nobody did impact yet. So we co-founded organizations like the Global Network of Impact Investors called Tonic, where we have 600 members right now for high net worth individuals, ultra high net worth family offices, all collaborating on impact. We co-founded impact accelerators all the way from India to Vienna, as a matter of fact, to Honolulu, Hawaii. My wife is part Hawaiian. And Innsbruck right now, where I'm from, to intermediaries like Sonnen Capital, and we pushed the envelope and financed that transition that started happening about 20 years ago. So today, I'm a dual citizen, and I was privileged to travel back and forth between the US and Austria in the last 4 years, even during COVID. And the appetite and the awareness for impact has actually risen to the point where I could co-found a few things here that are impactful in Austria, which really is I appreciate that being from here, and that was talked about in the last panel to make my contribution where I'm from as well. And so I co-founded a few efforts. One of them we'll talk about, actually Johannes Ortner is going to talk about that. Is the first emerging impact bank here in Austria. Austria does deserve an impact bank. We don't have one yet. Everybody else has one. And I'm uniquely qualified to put the impact spin on a bank. And so I look forward to actually getting the FMA improvements done there in the not too distant future. But and then I co-founded Impact Hub Tirol, which is corollary to Impact Hub Vienna, and the accelerators that actually help entrepreneurs to succeed. Internationally, I'm also very active in impact management. I co-founded IMP Plus, which is driving the design for impact investors to participate in system change, which there's a big appetite for that. I might talk about this later today a little bit, and also in going deeper on the awareness and consciousness side. So I'm working with circles of people who don't only want to talk about their investments, but also about how to lead an impactful life with everything that they have, which is what I do. So so the topic is, let me see, where are we? Is why impact continues to matter and how to do it right. So I prepared 3 themes today. I want to set the context about 5 really challenging global trends and how impact actually can partially alleviate and help mitigate these trends, and including 5 positive trends. And then I will talk about why impact matters, and finally how to do impact right. 3 things. So let me set the stage with the global big challenges that we are facing, and that where we need to evaluate if investment can actually make a difference or not. So one, of course, that everybody knows about is climate change. And so we know the science, we know that we need to do something. So investing in climate change mitigation is a no-brainer. You can make a ton of money with that because we will have to do something anyway, right? And so I think that impact investors can make a huge contribution to that field. A more challenging one is, I would submit, that social injustice and social inequality is a very bad mega trend on a big level. That one is more difficult to invest in because the market does not see it the way that we see it, namely that we need to fix that problem and we need to internalize social inequality and social injustice into the system. But if you have a philanthropic part of your family office or maybe subsidized capital, there's a ton of opportunity to actually seed that and make sure that it will become internalized into the market. And there is, of course, a nexus between climate change and social justice, which is the sweet spot for impact investors. Population growth and migration is another mega trend, right? And I think, one of the most fundamental design flaws of the economic system is that it's built on the notion of exponential growth on a finitely resourced planet. Now, you don't need to be a mathematician to understand that that doesn't work. I mean, it worked for 1-2 billion people, but it cannot possibly work for 8 to 10 billion people. So if you actually are into deeper impact investing, you need to challenge that notion and all the metrics that come along with that, including GDP and whatever, because it does not measure the success of humanity to become a humanity that provides a system for all 8.5 billion people, 10 billion people to lead a fulfilled and spiritually rich life. So we talk about how impact investors a little bit high level. This is a keynote, so I'm not going to go into details, but if you're interested in details, talk to me afterwards. I have them. Another mega trend that's really difficult right now is polarization and the end of fact. And I'm personally investing in the confluence between consciousness, impact, and high tech. And there's an opportunity to invest in the follow-on models of Google and Facebook and the Chinese government and the NSA that manipulate us and make us the product. And we need to change that. We need to get back in charge of our digital footprint and need to be able to actually sell it, make it impactful, whatever, right? And so you can invest in these topics. And then, of course, another difficult one is the decline in faith in democracies, if you wish, and the rise of authoritarianism, which is a challenge for many societies on both sides of the Atlantic and in the global south. We can talk about how to mitigate that too. So all these trends are complex systemic issues, and they deserve a systemic solution, because with just simple fixes, you cannot really fix that. And but let me also point out 5 positive trends, and then go into more the impact side of things. So 5 positive trends that we can counter to these negative ones are the innovation and modern technology, right? We talked a little bit about that, and that's a dual-edged sword. It can go really wrong with the powerful AI that we have, or it can go really, really right. I'm investing in making it right by working on NFTing, if you wish, or tokenizing impact as a digital asset, and then using the markets in order to actually spin it up and make it valuable. And then if there is a market for impact that will develop over time, then that's a very profitable business model too. We're just a few years away from that. It starts working for CO2 offsets and things like that, for biodiversity and other things. There's a whole new industries emerging on our path to net zero. So if you invest in them, you will make a ton of money. And if they're actually impactful, maybe there's some impact too. You know, I don't know about entrepreneurism here in Europe. I wish there would be more entrepreneurism here, and it's Europe sometimes is its own worst enemy in regulating and having these transnational borders where it's hard to just do crowdfunding, for God's sake, right, across borders and things of that nature. But I hope that we would be more entrepreneurial, particularly in this region here, Central Eastern European. You know, I think it's a huge opportunity, and mobilizing the really young people. I'm so inspired by them. They're cut out of the discussions about who controls their future. You know, and people call them climate terrorists. I think they're freedom fighters, and we should give them space to influence us and get out of their way, as opposed to making sure that they cannot do what they think is the right thing for their future. And of course, the 5th global trend is impact capital is arriving en masse, and that's going to be the rest of my comments is on that. I live mostly in the US, and so the Biden administration got the IRA, the Inflation Reduction Act, through Congress recently, and that's unleashing $500 billion to $1 trillion into the economy, into the impact economy. The EPA, the Environmental Protection Agency of the US government, is actually putting a greenhouse gas reduction fund together that we're working with $25 billion, specifically earmarked public money for communities, for tribes, for energy transitions, for building, things that impact investors deeply care about. So there's a huge opportunity on that side of the Atlantic to actually do public-private partnerships. In Europe, there is the regulatory frameworks for SFDR and others, right? And regulating the pension funds is a superb effort at making sure that ESG has to be reported on from the companies. I'm all in favor of that, and the US can learn from Europe on that part. So there's a lot's going on, and let me transition then into why impact matters. Even so, all these topics could deserve a keynote by themselves. I'm just doing a broad stroke, and then to inspire you, maybe to talk about these topics amongst yourselves or with us. But let me go onto the impact side. So we talked about the flaws of the financial system and the economic system. Well, the financial system we haven't talked about yet. So the basic fundamental flaw that's deadly for society right now of the financial system is that it's optimized for only optimizing financial return. And the consequences of this we feel now in these mega trends that are not good, with social inequality, social injustice, and what have you. So we need to change that financial system in order to include impact risk and impact return on the same level as financial risk and financial return, and then see what the postmodern portfolio theory might be, because Markowitz, who invented that theory 73 years ago, did not claim that it would work for impact. He did not claim that it would work for system change. So we need to have a new theory. So research is very important. Private capital is the most flexible capital to invest in these changes, because we are in charge of our capital, right? And we can direct it. And I have always enjoyed working with my teams on moving away from the fear of losing money to the joy of making a beautiful contribution to the planet. And it's much more healthy too if you do it that way in your IC meetings. So briefly, what is impact investing? We talked about that, and there's been a definition around for 12 years now, and it still holds. So it's really an intentional approach to investing that not only demands financial returns, but also ecological and social returns, and demands to measure these non-financial returns. So let's unpack that quickly. So it's intentional, not accidental. There is accidental impact happening, but impact investing is actually where we play a role and say we invest with the intention of making a change, right? It's an approach. When we started, people wanted to put us into an asset class, and we fought back. We said, no, we're going to build 100% portfolios across all asset classes, and we've done so, and thousands have followed that. And it's about, of course, not just financial return, but the other returns too, and measure it. So let me explain the spectrum of capital then that tries to do that, because there's a lot of confusion about ESG and impact and sustainability and what have you. So on one side of the spectrum, you have the pure for-profit maximizers, right, without any intentions of making a positive contribution. So that's on one side. One step over is negative screening. So the ethical community for decades, last century, said, well, I don't want to invest in certain things like alcohol or prostitution or weapons of mass destruction. So you screen negatively something out. It's not a positive intention, right? It's not impact, because impact requires a positive intention, as we discussed just a minute ago. One step over is positive screening, right? So from negative screens to positive screens. That's called ESG, best in class, where in an industry you say, well, we measure according to environmental, social, and governance criteria, and whoever scores high on that, we predict that they will have a better financial return, which is the case. It's being politicized, unfortunately, in the US right now, but it's the right way to manage your money. It has nothing to do with politics. And so that's, but for us impact investors, we go a step further, right? So if I want to, if my values would allow me to invest in weapons, and I'm not judging your values, whatever your values are your values. And let's assume that you can invest in weapons. Then investing in a weapons manufacturer that has a big ESG score, you will probably make more money than investing in one that has a low ESG score, right? But you see the problem. My values don't allow me to invest in weapons, and therefore I would not be able to invest in an ESG fund that pulls in all these things that I couldn't invest in. And so that's where then one step over is impact investing, where you go away from negative screening and positive screening to intentionally investing in impact themes that interest you and that make a financial return and an ecological and or social return. The last piece before you go to philanthropy is maybe systemic change, investing, where you actually don't know what the financial returns will be because you're investing in something where there's no market and therefore it's no benchmarks, and therefore you need to define, what financial return you expect for the impact risk that you take. So those are the categories that are being talked about. Most impact investors would say that if you invest in liquid assets, you need to go ESG and ESG++, and then you go privately into others, which is the next topic that I'm going to go in, and my last topic. Yeah, I'm good. So how to do it right? That's my last topic, right? And how to do it right really is dependent on your values. So we all have values, and I'm not judging you on your values, but if you do have values, then I would not understand why you would leave your values at the door when it comes to your investment strategy. So let's assume that you want to actualize your values in your investment strategy, right? Then you know what's not good for you. So the first step in converting your normal portfolio into an impact portfolio is to detoxify, to get rid of the things that make you sick, right? Because you don't stand for that. So why do you invest in that? And so that's important, because then you can sleep again, and maybe your next generation says, okay, well, that's at least a good first step, right? And then you go into on the liquid side, you can go into ESG, right? But make sure that you do your homework. There's so much ESG washing going on right now. Everybody has products, and we demand transparency on that. And like I said, we would not be able to invest in ESG that pulls in things that we cannot invest in. But ESG is better than non-ESG, so go in that. There's lots of products out there. We demand a little bit more than the normal regulatory reporting on the resource, on the resource consumption and what have you, and do that. And then on the private side, what are the themes that your family actually cares about? So, and then evaluate what you could invest in intentionally in order to actually be in accordance with the themes that you care about and the values that you espouse to, right? And then you set aside initially a little bucket, and you do that. You give your offsprings maybe a few millions to explore, and the funny thing happens. That enthusiasm of what they do, eventually the dad or the uncle or the cousin start getting interested, and they participate. Within Tonic, we see that all the time. It just takes 2 years, and its family dynamics are what they are, but they will play out over time. And then, if you're more adventurous than that, then let's talk, because then we can talk about changing the system itself. And that, of course, is not many people want to do that, because it's a fundamental ask of, well, you might lose some money in that bucket, right? And I'm happy to lose some money if I actually change the system. I don't want to lose money, but if that's the consequence and I box it in, many of us are actually okay with doing it that way in order to ultimately change the system itself. We have lots of tools available right now. It's not like when Lisa and I started 20 years ago that that nobody, first of all, believed us, and we co-created a lot of these tools. So all the way from designing our investments as plenty capital structures where appropriate to public-private partnerships that we talked about. We co-created the whole impact management toolkit together with other investors. And right now, like I said, I'm investing in the intersection of blockchain and modern technology. And the proof of impact is a big topic, because greenwashing is going on all over the planet. CO2 offsets are sold three times. And so if you put these events on a blockchain and then you analyze them with AI later, that's the investments that I do. And then we can prove that the impact actually happened. Tokenization of impact. But nothing of this will actually work unless we change our awareness and consciousness. So humanity cannot be regulated into impact. It's impossible. Regulations are important, but overall, that's not going to be sufficient. Just like technology cannot solve us. So technology and regulations are, a reflection of the society, and therefore, we need to work. And in order to change the awareness of a society, you need to change yourself, and that's why mindfulness is so important. Who are you, and why are you here? Only to make an intellectual argument of that your impact is bigger than the other, or do you really want to make a human contribution to humanity, which is what deep impact is all about. So we are at the crossroads. I'm at the end of my remarks. I look forward to the discussion. And if anybody is inspired to explore that field, let me know. There's lots of help out there for us to do that. And I look forward to our panel and the discussions. Thank you so much.
Charlie, thank you so much. Some very impressed yet naughty people in the audience already texted me. It's like, I love him. It's amazing what he's talking about. So thank you so much for being here.